The large cap US tech sector has been remarkably resilient in 2020 in the face of the global pandemic. While all three of the major equity averages have recovered from the first quarter sell off to log fresh record highs, the tech heavy NASDAQ was clearly the outperformer. Tesla logged gains of over 800% from trough to peak, and Zoom was up by over 700% from the low to the high. And to top it off, this month is set to be the biggest December for tech IPOs ever, with Airbnb, DoorDash, and C3 AI anticipated to raise $7 billion. So, what's in store for the tech sector in 2021? With me to discuss is Dan Ives. He's the head of tech research at Wedbush. Dan, great to chat to you. Now, clearly, it's been a very strong year for the tech sector, with investors favoring those momentum names. Is there a concern that as the economy regains steam, we'll see a shift away from momentum and more towards value?
Yeah, I think there's some concern in terms of that we'll call rotation from growth to value. And, but to me, in terms of just the secular growth rates, I think that's going to continue. I think tech stocks are up another 30% over the next year. If I look at cloud, e-commerce, as well as FAANG names, of course, there's risks on the horizon. You could see rotations out of it. But I still think it's a golden age for tech stocks, and also the political backdrop. If we're seeing a Biden administration across Europe as well as China, that's also bullish for tech, with I think a ratcheting down of the U.S.-China cold tech war.
So are you expecting another stellar year of returns for the US big cap tech sector?
Yeah, I think a year from now, FAANG names are up at least 30%. I think if I look at just the massive secular growth themes, for the Netflix, I look at Apple and the super cycle. You look at Amazon on the cloud theme as well as e-commerce. And then, of course, social media engagement and advertising coming back. Look, there's, of course, regulatory risk, both in the EU as well as in the Beltway. But I think for big tech, I continue to think right now it's still the middle innings of a re-rating for tech stocks. And that's why you're seeing these IPOs get flooded into the market. That appetite continues to be there.
Well, let's talk about Tesla, because that's one of the stocks that's absolutely had an incredible performance this year. Certainly one that divides the bulls from the bears. And the bulls are certainly very much on top, at least in 2020. It's logged 5 consecutive quarters of positive net income. But in terms of its share price gains, surely this pace isn't sustainable.
Look, in terms of the EV market, it's tough because investors are trying to play, of course, Tesla as well as some of the Chinese players like NIO and others. But we're still 3% penetrated globally. And when I look at Tesla, I still think it grows into valuation. I mean, our bull case is $1,000 for Tesla. I think if you look at the EV market right now, it's Tesla's world and everyone else is paying rent. And I think in a demand rebound as well as profitability, I still think you could see the stock move higher from here. Of course, right now they definitely have a bullseye on their back in terms of competition, but it definitely looks like a yellow brick road to success for Tesla, not just on profitability, but demand with China front and center.
What about Zoom? That's been another one of the standout stocks in 2020, a real proxy play on the pandemic in a way, with so many of us working from home. I mean, what happens when we all go back to the office? What role does Zoom play then?
Obviously, moderated growth when you start to see a return to the office in mid-2021 as vaccine gets disseminated. But if I look at work from home, I think it's a new normal in terms of where the Zoom plays. We see Slack with the Salesforce acquisition and just collaboration software. So you'll start to see growth moderate, but you're looking at what's really a new age in terms of communication, the Zooms. You have Microsoft on Teams, and of course, Salesforce now with Slack. And I think even on a return to the office, you're going to continue to see more and more Zoom, what might have historically been travel, for the coming years. And that's bullish for software and work from home names.
What about Apple? It's done very well this year, despite a lot of headwinds from store closures, for example, during the pandemic. You've recently upgraded your price target on the stock to $160, up by $10, and raised your bull case target to $200. Talk to us a bit about your super cycle thesis that's driving this optimism.
Yeah, look, I think this is the biggest product cycle that Cook and Cupertino have had in a decade. And definitely since 2014 with iPhone 6. I think when you look at it, Look, 350 million of 950 million iPhones right now have a window of an upgrade opportunity. Have not upgraded phones in 3.5 years. So I think you got that combined with the 5G iPhone 12. That's why it's a super cycle. You got 40% of the install base that is not upgraded in years. And I think you really have a game changer here in terms of 5G. Now, I think they could eclipse their record from 2015 in terms of 240 million units potentially over the next year. And that's the key. And I think when you look at Apple, it's a re-rating on the services as well as just on the super cycle. It's going to have to continue to play out. But that's why base case 160, bull case 200.
So what stocks in the sector are you particularly excited about in 2021?
I mean, to me, I think a big focus should be cybersecurity. I mean, we could talk about names like Zscaler, CrowdStrike, of course, some of the more mature names like a Palo Alto. But you really have, I think you start to see with the Palantir acquisition, I think a flood of new companies coming in. But we're talking about protecting the cloud. I mean, only a third of workloads are in the cloud today. When that goes to 55% in the next few years, that needs to be protected. So cloud security, that continues to be the area that we're very bullish on in terms of cybersecurity as well as cloud. And when you look at the overall cloud theme, I think $1 trillion is going to be spent over the next decade. And that's our forecast. And it speaks to, the Ives Cloud ETF and some of the global focus that we focus on in that ETF, and just some of even the large cap names. You look at Microsoft, you look at AWS on Amazon. I think right now we're still in the early days of just a massive opportunity.
And just finally, on the flip side, if we do see this shift from momentum to value, are there any stocks that are particularly exposed? Are there any stocks that we should be sort of steering clear of in 2021?
Look, I think on the EV side, it's a little heated. I think you look at some of these Chinese players domestically, NIO and others, you could see these stocks maybe sell off, after these parabolic runs. But I still think on EV, the markets there, the stocks could be volatile. But I think that also could create opportunity with those sell-offs, not just in the Chinese players, but of course for a company like Tesla, which continues to own the market.
All right, that's all we have time for. Thank you so much to my guest, Dan Ives, the head of tech research at Wedbush. I'm Victoria Scholar, and thanks so much for watching IGTV.
For more videos like these, subscribe to our YouTube channel, IG UK, and make sure to follow us on Twitter. We're at IGTV.